Hey guys, welcome to another edition of Paul's Planning Tips. I'm going to make today's planning tip short, sweet, and to the point. The market is down, inflation is up, geopolitical events are abroad, and political turmoil is right here in our own house. People ask me all the time what they can do to survive this storm. Simply put, you never should be in a position where you're forced or coerced by external events to react to something. You don't plan during a storm, that's when you hunker down. The planning takes place long before the storm clouds appear. You have to know beforehand what you intend to do during in order to avoid catastrophic consequences afterwards. And when the storm does eventually pass, your animals are sheltered and safe, your tools and machinery are stowed away, and your harvest will be plentiful as your seed and crops have been appropriately organized and protected from the elements. Now, if you're not sleeping through this storm, then you have one of two problems. First, you didn't plan correctly. Or second, you don't understand the plan you already have. In either event, feel free to reach out to your team here at Alliance Wealth Advisors for a complete 10-point risk assessment, where we check your retirement blind spots and benchmark your level of preparation against what is appropriate for a solid foundation in retirement. Now, as far as reacting goes, simply put, don't. That's emotion and fear driving your rational behavior. Disciplined, intentional, intelligent actions are never emotional, and they're always going to yield a better outcome. Just when the storm is passing overhead is not the best time to fling open the storm cellar and run into the field. Hunker down. If you had invested $100,000 in the S&P 500 in 1997 and stayed fully invested for 24 years, you would have realized a 12.3% average annualized return. Now, if you removed the 10 best trading days over those 24 years, you would have reduced your average annualized return to 8.06%. Miss out on the best trading days? You only get 2.89% average annualized return. That's staggering. Finally, what happens if you skip out on the 60 best trading days over those 24 years? You would have an average annualized loss of negative 2.92%. And the irony is that many of those best trading days in the market occurred during periods of the highest market volatility. Smart Retirement is Alliance Wealth Advisors' dynamic distribution model, and utilizing this approach while allocating your money between spending, protected, defensive, and growth buckets protects your cash flows at retirement during periods of market volatility, while giving you permission to not panic about your account's daily balance, as it's totally irrelevant until the assets are liquidated for spending purposes. Investing is not like going to a casino. In fact, here are the odds to winning at a casino. Contrast that with the percentage of years U.S. stocks posted positive returns over rolling periods of time from 1901 to 2021. In other words, I can take any 15-year rolling period of time or the last 120 years, and 99.9% of the time, my return was positive. Stocks go up because earnings improve. Over the last 65 years, you can see the near perfect correlation between earnings and stock valuations. It is not a zero-sum game, guys. Stocks are partial ownership in real companies with real earnings. If you watch your account balances daily, might I offer a simple two-word sermon? Stop it! Investing is a long-term strategy. Managing cash flows is done daily, and good planning should have already been done to incorporate that long before the storm arrived. If you feel you have to act and do something right now, here are 3 suggestions. 1, you can buy into a down market, dollar cost averaging. 2, you can sell non-qualified stocks that are down in value to build protections against future tax liabilities. We call it tax loss harvesting. And 3, you can look for opportunities like Roth conversions, which have the potential to reduce both Medicare Part B premiums and Social Security taxes in the future. Whatever you do, don't do anything without first talking it over with a fiduciary or licensed professional. So reach out to your team here at Alliance Wealth Advisors, and until next time, retire smarter, not harder. Thanks, everybody.